Thanks for joining me this Friday, the 16th of May. I'm Grady Wolf, market analyst through Bell Direct, and this is your weekly market update. A long-awaited temporary trade deal between the US and China, favourable economic data, and corporate trading updates were the drivers of global market moves and sentiment this week. So let's dive into the week that was on a global market scale. The week started on a high as investors globally welcomed the temporary 90-day trade deal reached between the US and China over last weekend's meeting, which President Trump deemed as a great success and a reset. The latest update from the China and US trade talks is that both nations have agreed to cut their respective tariffs on one another for 90 days, with tariffs on Chinese goods imported into the US to be 30% and tariffs on US goods into China to be 10% for the period. While this is a step in the right direction and boosted markets early in the week, the temporary nature of the deal at hand had investors concerned over what tariffs will look like after the 90 days are up. Initial concerns over a US inflationary rebound due to tariff imposition were also eased on Wednesday after US CPI data for April was released, which fueled investor appetite for growth and higher risk stocks again, leading to a pullback in safe haven assets by midweek. US CPI data for April came in at an increase of 2.3% on an annual basis, which was lower than economists were expecting, and indicate the US inflationary journey remains under control despite fears of tariffs boosting CPI. While this is only one reading, it did boost investor sentiment that inflation continues to ease and a recession might just be avoided. Locally on the economic calendar front this week, we had a mixed reading of the current inflationary outlook for Australia. After wages growth came in stronger than expected for the first 3 months of the year, and for the first 12 months for the March quarter, wage price index rose 3.4%, which was an uptick on the 3.2% wage price growth reported in December, primarily driven by the private sector wages rising 0.9% and public sector wages rising 1%. New state-based public sector enterprise agreements were another driver of the rise in WPI during the March quarter, but the overall uptick in the data provides a challenge for the RBA to assess ahead of the next rate meeting, which is next week, where it is currently a 50-50 split in the market expectations that the RBA will cut the current cash rate to 3.6%. Jobs data out on Thursday outlined the resilience and strength of the current Australian jobs market that could work against the RBA's rate journey as more jobs were created than expected in the last month. For the month of April, 89,000 Aussies found work, which was significantly higher than the number of people, or the 22,500 that markets were expecting, while the unemployment rate remains steady at 4.1%. With more Aussies finding work, more money circulates through the economy and drives inflation higher through greater consumer spend. While global markets experienced some boosts this week, all eyes will be on the RBA next week, when Australia's central bank will hand down the latest rate decision on Tuesday. Now, on a stock-specific level, we had some strong share price movements this week. Xero, as shares rallied on Thursday after the cloud-based accounting software platform reported a 23% increase in operating revenue to 2.1 billion New Zealand dollars for the full year. While annualised monthly recurring revenue grew 22%, and Xero also reported a 30% increase in NPAT to 227.8 million New Zealand dollars. Aristocrat Leisure tumbled 13% on Wednesday after the gaming giant released a first half trading update that missed investors' hefty expectations. For the period, ALL reported a 9% increase in revenue year on year to $3 billion. EBITDA up 13% to $1.2 billion and NPAT rose 0.1% to $664.9 million. So investors were expecting a lot. GrainCorp, as the ag company, rallied on a solid first half result, including upgrading its full year guidance following a strong East Coast harvest season. And location tracking tech giant Life360 soared over 10% on Tuesday after releasing record Q1 results, including a 33% increase in total subscription revenue to $81.9 million US dollars, a 32% increase in total revenue to $103.6 million US dollars, and positive operating cash flow of $12.1 million US dollars, up 13% year on year. And the company ended the quarter with cash equivalents and restricted cash of $170.4 million. Locally, from Monday to Thursday, the ASX 200 rallied 1.3% as a more than 8.5% surge among tech stocks offset weakness for utilities, staples and the REIT sectors. The winning stocks were led by Liontown Resources rocketing 46%, while Mineral Resources soared 38% and Life 360 ended the week up 27.75%. And on the losing end, Helios tumbled over 30%, while Ramelius Resources ended the week down 16.3%. On the broader market index, the All Ords gained 1.28% this trading week, led by Appen rising 40.34%, while MedAdvisor fell 30%. The most traded stocks by Bell Direct clients this week were BHP, Macquarie Group and Woodside. Clients also bought into CSL, ANZ, Aristocrat Leisure and Northern Star Resources, while taking profits from Fortescue, CBA and Zip. And the most traded ETFs by our clients were led by iShares S&P 500 AUD ETF, Vanguard MSCI Index International Shares ETF and Global X FANG Plus ETF. On the economic calendar front next week, we may see investors locally react to the RBA's rate decision out on Tuesday, while overseas we will gain further insight into China's recovery through industrial production and retail sales data out on Monday. And that's all for this Friday and this week. I hope you have a wonderful weekend and, as always, happy investing.